Let me check to make sure that my that the live is activating on my Facebook page. Then we'll get it going. All right, yeah, we're good. So let me see. Just give me a second here. What's going on, guys? So welcome to another backtesting session. I'm going to actually do it on NAS100. And what I'm going to do is I'm going to actually show you guys my strategy. And now the strategy that I actually implement when I trade in the market is I actually use a little bit of institutional strategies along with what I've learned on the retail side. Understanding institutional trading as far as imbalances and order blocks are really the key to really taking your trading to the next level, because that's when the banks are actually making their moves. And when you move, when they move, so to speak, then that's where you're going to get the best consistent moves in the market and trades. All right. So typically what I do, these are my trading rules. The first thing I do is just mark up basic market structure from the 15-minute to the 4-hour. That's the first thing I do. Then the second thing I do is I identify the trend on the 15-minute time frame. Is price trending up? Is price trending down, or is it consolidating? And then I locate imbalance candles and imbalances in the market just to kind of get an idea of exactly what imbalance orders that more likely the banks are going to want to fill first or drop off first, so that way they don't lose too much money not closing previous orders because of previous imbalance moves. Then once I figure that out, then basically I confirm my entries with the Delorean EMA indicator, EMA cross as extra confirmation. And then that's how I actually do my trade. So we're going to go ahead and step one. So the very first thing I'm going to do is actually mark up from the 15-minute all the way to the 4-hour. All right. Now, so we like to go 6 months back or as far back as possible, because when you get an idea of what price is doing in the past, you'll get an idea of what price more likely is going to do with these zones, supply demand zones in the future. And that's what you're going to want to look for, because price in a sense can be predictable as far as how it interacts with supply demand zones, especially if you know your pair. You pick a pair and you constantly study it, you're going to get an idea of exactly how that pair behaves. You know, it's almost like if you have a child. As years go by, you get to know your child and you get to know his behavior pattern. You get to know, you know, their mindset, how they think, when they say things, when they don't, how they feel about certain things. It's really the same thing with pairs. All right. So I go back as far as possible until TradingView doesn't record any more price action. So then once I find that, this is where I put my vertical line. All right. Then what I start doing is I start marking up basic market structure, okay? And I like to kind of base my market structure off of imbalance moves. So I'll give you a perfect example. So like here, I would definitely put a zone here, because obviously the zone was extremely respected to where it forced price to really, really shoot down and cause an imbalance move to the downside. So this is where I put my yellow horizontal line. Now I'm gonna warn you guys, my computer is a hater, and sometimes it likes to pause or likes to freeze for no apparent reason. So I'm just gonna let you guys know that, just in case if it happens. But then I like to mark another one here. This is a good one. And then another one down here. Now I probably should have started from the bottom to the top, but it's all good. So now marked up this. And then I see another one here. All right. Let me save my progress so I don't lose it. And then I'll take another one here. Possibly put one, yeah, maybe in this area. And then put one on the top here. And then, yeah, that's probably good enough for now. Then what I'm going to do is I'm going to actually zoom out. And this is where I'm going to actually draw my supply demand zones from the body of the wick to the body of the candle. Okay. That way you're drawing very accurate and crisp supply and demand zones. Okay. So now, just to give you guys an understanding, this is what we teach at Trading Pro 5000 and in Inside Tradenology. All right. So this is how we do it. All right. So definitely mark up down to here. Yeah, I could put it here. And sometimes I make these zones a little bit thin because I don't want to make them too big, but just big enough to where we can see exactly how price is interacting with these zones. Now I'm going to actually change the coordinates of these so that way they can stretch out throughout the whole screen. So if you're a trader and you use TradingView, all you have to do, I'm going to show you how to stretch your zones across the screen without you having to do all of that. Basically, you click on the zone in the middle. You're going to click on coordinates. Over here, the first price you want to put at negative 15,000. And then the bottom price, you just want to put 15,000. All right. That way your zones stretch all the way across the screen as far as it can go. Okay. Or as far as you need it to go. So now we want to do that. All right. So that's what I'm doing. This is basically what we do from the 15-minute to the 4-hour, guys. I mean, once you get used to market up charts and knowing how to really utilize TradingView, I mean, it's really a piece of cake. There's really nothing to it. All right. So now we did this on the 15 minutes. So we're going to go ahead to the 30-minute. We're going to do the same exact thing. All right. So now, so we see we marked up the 15-minute. Now we're going to get started and mark this up, and this is going to be the 30-minute. Okay. So I like to start here, so that way when I start marking up my charts, we know that it's the 30-minute time frame. So I want to kind of put, you know, the next one right here. We're going to make this green. All right. So that way we know that this is a different time frame. I see a very strong up move here. So this is probably a good support. So I'll probably just put one here. Probably put one right here. Price hit this resistance, force price to go down to this next zone. And it matches with this one because price resisted this zone once again, just like it did previously here. And another one right here. So then I did that. So now we're going to do the same thing. We're going to mark up our supply demand zones. I'm going to change the color of this. This is going to be clear and green. All right. Crucify. Put one here. And then we got another one down here. And then I'm going to save this progress. And so same deal. All right. Got to change this one. All right. So now we did that on the 30-minute, as you can see. So now we're going to do on the 1 hour, right? Same exact thing. So we did the 30-minute here. So now what we're going to do is we're going to attack the 30-hour. I mean the 1 hour rather. So then I see some good interaction there. Yeah, that's probably a good zone. Yeah, that's a good one. So I'm going to change this to red. This might be a good one. Yeah, this is a good one right here. We have another one up here. All right. Save this. Then I'm going to draw my supply and demand zones on this as well. And I'm going to change this to red. That way we know this is the 1 hour. And the reason why we do this is because, so if you're a scalper and you trade from the 15 to the 30-minute, then you'll know exactly what price is doing with those time frames. If you are intraday trader or swing trader, then you'll know what price is doing on the you know, on the 4 hour on the 4 hour to the 1 hour to the 4 hour. Okay. So you're not confused as to what price is doing on all these time frames. So then when you get to the time frame that you want to do your sniper entry in, now you know what price is doing. So you can get an idea of what price is going to do and just look for confirmation. You know, there's no confusion. You know, you never want to have confusion in the market. So that's why it's important to know your zones and to know your market structure. And it also is going to take your institutional trading to the next level as well, because then you'll know exactly what price, you know, more likely what price is going to go when it's filling in those imbalances. And I'm going to talk about that in a minute. So we marked up the 1 hour. Okay. So now we're going to move on to the 4 hour. All right. So now in the 4 hour here, we're going to pretty much do the same thing. So I definitely see a zone up here. And at this point, price was kind of overbought. So we're definitely going to draw a supply zone up here. No question. So we just kind of draw this. And then we probably have another one here, maybe at this wick. So I'll draw a zone here. We want to make this white. Actually, we can make it purple. We'll do that. Now just draw one here, a very thin one here. And we're gonna make the style. So we can make it purple. background purple. There we go. All right. So now we marked up our zones all the way to the 15-minute. I mean, all the way to the 4-hour. So now we're going to go all the way back to the 15-minute. All right. So you see how price is interacting with these zones perfectly, right? Yeah, this is the purple zone just drew. Price interacted with that. And this as well. So we drew these perfectly. So now step one is done. Okay. So now step two is going to be identify the trend on the 15-minute time frame. Now, what I'm going to actually do is I'm going to do a little something here. Might put this over here. Okay. So my first step is mark up structure. (15 to 4 hour). Let's say time frame. I don't want to do this too much. Second thing is identify the trend, and that's what we're about to do. Number three, okay, institutional imbalances. All right, and then number four, plan trade with Delorean EMA cross. Plan trade with Delorean EMA cross confirmation. Actually, I'm gonna say in parentheses, wait for confirmation. And then execute trade upon EMA cross from Delorean EMA cross. That's how I do it. So now we're going to actually go ahead and do. So I kind of stretch this out a little bit more so you guys can kind of see it. I wish there was a way I could stretch it out, maybe here. Well, let me pull it down. Well, I ain't gonna worry about it. So let me move this over just a little bit here. And then I'm gonna just move it over. All right, so now let me save my progress. So what we're going to do now is we got done with the first step. We're going to do a second step, identify the trend. So according to the RSI, we can see that price is trending up. It's clearly not ranging. You can see, you know, higher lows and higher highs. So more likely price is bullish. All right. So this is something I might start doing. I might just say, you know, trend is bullish. All right. So we know that. But now, and this is just maybe a little bit something I may add. You guys don't have to do this. Point is just knowing which way price is trying to trend up. So more likely it's trending up this way. So then now we're going to locate the imbalances, and this is when I turn on my imbalance indicator. Okay. Now we see an imbalance here, so I'm going to actually mark that up. Now normally I would draw a zone here, but since it's so close to this zone, I'm just going to bring it up to here. Okay. So let's just say this is the imbalance zone, which is our demand zone. Okay. Then we have some other imbalances up here. So I'm going to make it very thin so you guys can see it. I'm going to stretch this all the way out. All right. There's another one up here as well. Hope my computer don't go out on me. If it does, I'm gonna throw it out the window. Well, not yet. All right. So these are going to be our imbalance zones, as I call them. Okay. So the way it works with the institutions is anytime when you see these type of moves, these are imbalances, which is price deficiency. What that means is that when it calls an imbalance, that means that there are going to be a lot of other orders in the market that didn't get fulfilled, like for example here. So I'm gonna zoom in. So you see here, they sent price down. This is an imbalance in this area, and this is an imbalance as well. But there was a buy order that got left open because price trended down so hard. So when you look at this area here, I'm just going to draw this real quick. This was the last buy before price was sent down, okay, to the downtrend. So they weren't able to fill this buy order here. So just imagine if you're a bank and you put in this buy order and then all of a sudden price sold. Well, guess what? You may have probably put in a sell order as well, okay? So let's say you put in a buy order here, but you put in a sell order. Well, you may be billions or trillions of dollars in profit here, but you may be in billions or trillions of dollars in negative because this buy order didn't get filled. So what happens is, knowing that the banks have to bring price back to this area to drop off that buy order that did not get filled. So in order that, so that way they can actually be in the positive again and recover that negative loss, right? So that's how imbalances are filled, okay? So knowing that, so we see that price created an imbalance here, okay? And as well as up here, okay? So they filled 50% of that right here, okay? All the way up to here, they brought it back. Now, there's an imbalance down here that was created when because there was a last sell candle here and then price went up, okay? So there's an imbalance here and there's an imbalance here that they're going to have to fill or eventually have to fill, okay? So it's possibility that they might actually fill in maybe these imbalances here and then possibly send price down to fill this imbalance before ultimately bringing it back up. Or they may actually send price all the way back up to create an all-time high and fill all these imbalances that this whole trend created here. So one of the things that I forgot to do, but it's not too late, is, so this is what I'm going to actually do. So I'm going to erase this. So now we have an idea of where price may go either way. So normally I do this on step 2. I accidentally skip this step. I turn on my higher high and lower low strategy indicator. All right. And so then what I do is I look at the most recent high. So this is the most recent high here. And this is probably like the most recent low here. So then I put horizontal lines on these highs. Okay. Because what I want to do is, and I put one here. I actually might put one just down here. That's probably might be more appropriate. Yeah, that might be more appropriate for now. So the reason why I do that is because the price could break this line and then come down and fill this imbalance, you know, from these candles and these previous candles and then all this here. They could sell it and send it down. Or they could just go ahead and buy it up and fill all this imbalance up in here, either or. Now I said price was bullish, more likely it probably is, but I want to wait for a break and retest and confirmation. So if price breaks above this and buys up, then I'm jumped to the conclusion they're going to buy it up to fill all these imbalances up here. But if price breaks down and retest here, then they're probably going to try to fill all this imbalance in here first before buying it up. So I want to wait to see what the market is going to do. So then I usually set my alarms and wait for the breakout. That's the first thing I do. Then the very next thing I do is really step 4. So step 4 is when I turn on the Delorean EMA indicator. Okay. So now price is clearly going into an uptrend because we basically use this indicator as extra confirmation. When the yellow EMA indicator crosses the red, that means that it's a strong uptrend. We see that it crossed the red EMA once, the yellow one. So it's a possibility this may be another pullback and it may be shooting up. Now another thing I might do as well is pull out my fib just to see where price is pulling back at. And really, in reality, price pulled back on the 6180, made price go up, pulled back on the 50 before, and that's what price really went up. Now it pulled back on the 3820, so price might be ready to actually shoot up just based on these pullbacks. So I want to say that price is probably going to buy up to this point. So then what I do is I take my risk to reward tools. I go ahead and just plan my trades. And I'll tell you why in a minute. So this is going to be my planned buy trade. Maybe up to this point, this is my entry. And then this is probably going to be my first take profit here. Maybe this is going to be my second. That might end up being my third because I might just set one to get at least 200 pips from here. And as well, 200 pips can be even, dang. I just set my first take profit here. And then just put the second or third one up here. Just in case the price buys up and hit all this. It's very possible. Then the next thing I like to do is I like to take my risk to reward tool for the short position and plan for it if it decides to sell. That way I'm ready for either one. Okay. And the reason why I do that, and this will be my first take profit here, and I probably might make this my second one. The reason why I do that is because when price decide to break on either one of these, then, and I forgot to activate my my replay tool. This is supposed to be a backtesting session. Okay, so this is what I'm going to do. So this is how I plan it. The reason why I do it this way is because if I click on this risk to reward tool, it's going to already have my stop loss and take profit and entry price. So I could put this in whether I decide to do a market execution or pending order. I already have these pasted in my MetaTrader 4. So when price strikes, all I got to do is either hit buy or sell, depending on what direction price goes. Now, for the sake of this video, I meant to do a back testing session. So what I'm going to do is, let me turn off my auto save here. And then I'm going to kind of actually go back in time. So let me just erase all of my drawings real quick here. And then I'm going to actually go back in time and choose an area where we can see how price does exactly what it does. So what I'm going to do is I'm possibly going to bring it back to, let's see. This was a huge impulsive move. So I'm going to initiate this one. Okay. So let's say this is current price. Okay. Matter of fact, I'm just going to save it. I'm going to just redraw it again. So let's say I marked up my market structure from the 15-minute to the 4-hour time frame. Okay. And so let's say we have a zone here. Okay. And then we have possibly a zone like, you know, maybe up to here. Okay. This is just an example. And then we possibly maybe have a zone drawn maybe right here. They're a little bit sloppy, not crispy, but that's because I forgot to do the back testing tool. So then I'm going to show you exactly how I would plan for this trade. I'm just going to stretch these out. So let's say I marked up the 15-minute to from the 15-minute to the 4 hour, and then I come to this point, right? So remember what I told you guys about the institutional, the imbalances, right? So then I get to this point, I identify the trend. So when we identify the trend, we can see on the RSI prices trending up. I can even look at it. So we'll just draw a trend line here. Okay, you can clearly see that. Okay, and well, let me take that back. Actually, price is actually trending down. It's really trending down. But this is really a lower low, lower high, lower low. It's probably a lower high. So I would probably jump to the conclusion that price is trending down, in my opinion, but I would still look at my other confirmation. So let's just say price is trending down, okay? So then, I identify the trend, and that's when I locate the imbalance candle. So I turn on my imbalance indicator, okay? So we see that there was a very huge imbalance here, okay? So they're going to have to fill this area. So I'm gonna mark this, and I can actually just put the zone here. Matter of fact, this is what I'm going to do. We're going to draw a zone from this imbalance to this bottom here. That way we see this is a valid zone. I'm going to try to drag this home for you guys, so that way you guys can get this. So we see a lot of imbalance in this area. Last buy, remember, last buy candle, and then it went down. So that lets you know that price was trending down. Another one here, another one here. So then I would actually draw another zone here. Since this is the last buy candle, so this more likely was an order block here. So we'll draw and then put the zone all the way across to here. This is the next take profit zone I'm looking for. Price decides to buy up. But if it decides to sell, then this is going to be the next take profit level, because we have an imbalance here. So I'm pretty sure you guys are starting to understand what I'm saying. So now that we did that, sometimes I may adjust my settings on the indicator. So sometimes I may show the order block. And there's a lot of red up in this area. So this lets us know that there was a sell order block up here and down here. So that lets you know that price was trending down. Okay, but we'll turn that off. So now, like I mentioned before, so I look at the imbalances. And so price is either going to fill this first, either going to sell it and fill this first, and then ultimately buy it up to fill all this imbalance here that this trend created all the way over here. Or they're going to probably buy price up to fill this imbalance, maybe selling, then fill this, and then ultimately buy it up. That's a possibility. So now that we know that, then that's when I actually turn on my higher low and lower low risk strategy indicator. And I say to myself, and I say, okay, so I'm waiting to see which way price breaks. So I see prices kind of pushing up to here. So then I would probably just look at this high here and see if it breaks this resistance. And if it does, then I probably will buy if the next candle closes above. Then for a break and retest for a sell, I probably would put it here. Okay. Then we'll turn it off. Now I know my screen looks a little messy, but you know, this is how I draw it. So then my rule of thumb is if price closes above here, the more likely it's going to buy off and fill all this imbalance here. Maybe even go up to this next zone. But if price decides to sell and close above, they're probably going to look to fill the rest of this area here down to the zone, maybe sell it. Okay. Now, of course, we did a back testing replay, so we know price is going to sell because we've seen it beforehand. But if I was to look at this without knowing where price is going, I probably would say to myself that more likely they're probably going to want to fill this area first, because it makes sense only because if they drive price to where it's oversold, they're going to have plenty of buy momentum to bring price all the way back to fill this imbalance and create an all-time high. Okay, so that kind of makes sense, but you just never really know until you get that extra confirmation. So then this is where I turn on the Delorean EMA indicator. Now the yellow did cross the red, but when you look here, the yellow crossed the red here quite a few times. So that gives you an indication that price is kind of selling. So then I would say to myself, okay, maybe price probably might buy, but I need to wait for that confirmation, that next candle to close up and push up, then I'll probably jump in. But if not, then I'm not going to buy. I need to wait for the break and retest. So then we go ahead and plan our risk reward tool. So for this one, this will be my entry. This will be the first take profit. This probably be the second. I probably might make this the third, the ultimate. Put my stop loss there. Then for the sell, I would do the same thing, because remember, I put these in place because I can, if price break and retest, I can easily access this and put in my stop loss and take profit and just paste it in my phone, so that when price start to move, all I got to do is hit buy or sell. Okay. So actually this would be the entry here for the sell. Triple. Probably put stop loss maybe up here. And then my first take profit will probably be down here for the sell. And the second one would ultimately be to fill this imbalance. So down here. And then if we're fortunate, maybe price might hit its third take profit, and so we will put it here. So then what I basically do is wait and sit on my hands and figure out which way price goes. So let's go ahead and play the replay tool and see which way price went. And let's just pretend we don't know where it's going to go, even though we kind of know because we did a back testing. Let's do it. All right, so price is really filling this imbalance and is pulling down. Still not confirmation. Still not confirmation, but it may be pushing down. Okay, so now this is when I would actually have jumped into the trade. Now the next candle didn't close below, it just kept on dropping. So at this point I would be sitting in, and I would just be sitting on my hands and just putting in. I probably would have put in my stop loss and take profit for the sell. I might have maybe even put a pending order entry price here maybe, or I probably would have just did market execution. But by the time price probably had gotten down to here, maybe passing this resistance here, maybe even up here, I probably said, man, forget it. Let's go ahead and sell it. So ultimately, price smashed my first take profit here, which would have been, how many pips would that have been? From here all the way down to here, that's 460 pips. If you do $2 per pip, that could have easily been maybe almost a $400 profit, but it went all the way down to here, which that could have been $1,000 profit. That's crazy, right? So what else price did? Dropped even further. So it definitely came down to fill this imbalance, right? Maybe might even hit this point. We'll see. That's a total of 1,000 pips. That's a bag. Probably would have paid your house payment. Yep. They came down to fill all this mitigation here. Yep. Last sell candle, they had to come down and finish that and dropped it even more. So they want to make price oversold before they actually buy it back up to fill all this area up here. So let's see how much farther it went. Ouch. Yeah, it's giving me a stomach ache watching this. You probably didn't pay 2 house payments with that if you had a decent lot. But you see, they mitigated all this area and they had to overbuy. Oversell price. That's why it's oversold on the RSI here. So we can see that. So, yeah. Now they got all this imbalance to fill. So now they got the momentum to fill this imbalance and bring it all the way up, eventually bring it all the way up to here. But they still selling it. But then now, and see, now we have a last sell candle here. So this is probably an indication it's going to buy up. So we will actually draw a zone here. You will see that price is probably interacting with that lot of liquidity. And now they fill that imbalance, bringing it back. Now price is going to start trending up, but they're going to start filling imbalance that way. And so then eventually it's going to come up to here. Maybe not right away, but eventually, see, they bought all the way up to fill that imbalance from here. See, then now they bringing it back down to fill all that imbalance. And then eventually they bought it up again. And eventually they're going to bring it all the way up. You see, they filled all this imbalance right here. See that? Bam. Okay. So that's how it works. I'm going to have to leave the fib for another time because I don't want my computer to go out. So I'm going to leave that for another time, Chris. We're definitely going to do that. But I'm going to go ahead and stop this recording because this was a successful back testing session. And I definitely want to post this in a group and on YouTube. Well, I could probably explain the Fibonacci once I stop the recording. So guys, that's it for this back testing session. See you in the next one.